It is 8:20 a.m. Pacific Daylight Time. It is the 21st day of May 2026. This is episode 1326 of Bitcoin, and I got a few things today, but I've got a long read. It's going to be from our friend Gigi about this on-chain zap business going on Nostr. I've talked about it a couple times before. It's turned into kind of like the first real heavy fight about Nostr. Sort of the same kinds of fights we've seen in Bitcoin, but this one is more Nostr centric, even though it does certainly include things that are going on with Bitcoin, because that's sort of the heart of the matter when it comes to this on-chain zap business. And Gigi's got a really nice rebuttal to the entire thing, and I want to read that, along with regular news, like Nakamoto is in the news. We're going to start there. And then, if I have some time, it looks like the Sinaloa cartel may have been mixed up in using crypto for money laundering, and not only have they been sanctioned by the United States government, whatever the hell that means. I'm like, oh, we're going to sanction a drug cartel. Surely they'll come in line. Yeah, okay, whatever. But it seems that the FBI may have seized some crypto as far as the Sinaloa cartel is concerned. And then in the back half of the show, we're going to talk about Binance and SpaceX. That looks like they're launching a pre-IPO because SpaceX is about to IPO. And then we're going to go over to South Carolina. We're going to revisit a bit about the Silvergate Bank, because they're back in the news. And let's see here. Oh, yeah. Word of warning, we'll end the show because we've got yet another kidnapping attempt. You guessed it. Yes, it's in France. But let's warm up with Nakamoto. This is written by Stephen Cotti out of Cointelegraph. And this is just a sad story. Bitcoin Treasury Nakamoto plans a reverse stock split to save ailing share price. Now, a reverse stock split, so that you understand what it is in case they don't describe it. Generally speaking, when somebody talks about a stock split, if you own one share of, I don't know, say Chevron or something like that, and they go for a 2-for-1 split, at the end of it, you have two shares that are both worth half the original value of your first share. You'll end up with, on the day of the split, the exact same amount of value, but instead of it all being in one share, it's going to be in two shares. A reverse split goes the opposite direction. If you had two shares of Chevron and they were both each worth like $50, so you got $100 total value, you end up with one share of Chevron stock that's worth $100. Okay, so with that in mind, let's read this one. Bitcoin Treasury Company Nakamoto is moving ahead with a shareholder-approved 1-for-40 reverse stock split on Friday, that's tomorrow, in an effort to avoid delisting from the Nasdaq stock exchange. The company received a notice from Nasdaq on December the 10th warning that its stock price had fallen below the $1 minimum for 30 consecutive business days, according to an SEC filing. Nakamoto has until June the 8th to address the issue and keep its stock price above $1 for at least 10 days. A reverse stock split reduces the number of shares outstanding. In a 1-for-40 split, every 40 shares are combined into one share. So after completion, Nakamoto's total common shares will drop from 696.1 million shares to 17.4 million shares. Quote, the reverse stock split is intended to increase the per share trading price of the company's common stock to regain compliance with the $1 minimum bid price requirement for continued listing on the Nasdaq Global Market, That end quote. Treasury companies have been in a downturn since 2025, with many companies' stock prices falling below the value of the crypto on their balance sheet, Standard Charter reported last September. Wojciech Kaczynski, Chief Strategy Officer of crypto infrastructure and treasury company BTCS, told Cointelegraph in March that treasury companies will likely start merging and consolidating this year just to stay afloat. Nakamoto's share price, Naka and AKA, closed at 16 cents on Wednesday, which is down 7.5% according to Google Finance. It is down more than 99% from May of just last year, when it traded above $25 shortly after the company unveiled its Bitcoin treasury strategy and merger with healthcare provider Kindly MD. Nakamoto shareholders approved the reverse split ratio range of 1 for 20 to 1 for 50 at a special meeting on May the 8th, and the shares are expected to undergo the change on Friday. The company announced its first quarter financial results on May the 14th, recording a 500% quarter-over-quarter increase in revenue, but a $238.8 million net loss, with more than $102 million attributed to a mark-to-market loss on its 5,000 Bitcoin treasury after the cryptocurrency fell 23% during the quarter. So that's sort of where Nakamoto is at. Now, just in case you don't know, Nakamoto is the umbrella company that owns Bitcoin Magazine, the Bitcoin Conference, not only the big one here in the United States, but they've got a couple of other ones out in the world. And they've got a couple of other things that have been going on. And this is all David Bailey's outfit, right? So he left Bitcoin Magazine and whatever the umbrella company was at that time for all of that stuff, for the conference and Bitcoin Magazine and all that. Started Nakamoto with this treasury company, then folded into or alongside of this Kindly MD, and now we've got Nakamoto as a treasury company. Kindly MD wound down all of their medical stuff, and I'm not exactly sure what it was that they did, but they were definitely in the medical industry or healthcare industry. Well, they've wound all that down and is just now basically a solid 100% treasury company. And then right after that, David Bailey announced they were going to fold Bitcoin Magazine, the Bitcoin Conference, and all other properties into Nakamoto. And since the start of Nakamoto, like the story is talking about, you've seen a 99% share price drop from $25 as a high down to, I think it's sitting at 14 cents or 15 cents. It's not good. And the telegraphing that the only way that you can save your listing on the Nasdaq is to basically fold 40 shares of your stock into one share is, well, that's just ridiculously sad. And here's what I suspect is going to happen. After that stock split or reverse stock split occurs, you'll see a price bump a little bit. Not just because of the consolidation of 40 shares worth 15 cents into one share worth whatever 40 times 15 is. You're going to see a slight price bump after that, and then it's going to drift back below $1. And there's not going to be any saving of Nakamoto, except that somebody's going to come along and buy Nakamoto, and they're going to buy it just so that they can get the Bitcoin. But they're also going to end up owning, unless they split it out somehow, they're going to end up owning Bitcoin Magazine and the Bitcoin Conference. So just be prepared for, the bullshit that rolls downhill after that. Okay, so on-chain zaps on the Nostr protocol has been causing a lot of strife, a lot of people grief. Some people have been like almost throwing full-blown conniption fits, which I don't necessarily believe is required at this point. I think we have a tendency to get a little too far over our skis because we're so sensitive to everything. However, there are problems, privacy problems with on-chain zaps. And Gigi doesn't really describe exactly what's going on. He's basically responding to the issue. So what is an on-chain zap? Well, I've described it before, so I'm going to be brief. Your NPub, which is sort of your identity, your digital identity on Nostr, and it's given by your NSEC, which is your secret key. So it's just like a Bitcoin wallet. You have like your seed phrase, and that's like part of the generation of your private key. And your private key can spin up public wallets, right? Same thing here. Your NSEC is your private key, and just like Bitcoin, that's where you sign a transaction. So if I send a note on Nostr, the only way that I can actually send it is if I have possession of my private key. It's all done under the hood. But when I'm logged in and I've got my NSEC in my client and I'm authenticated, then I'm signing my notes with my private key. My NPub is what everybody else actually sees, right? That's like sort of my public wallet. So when I send a note that I've authorized through my NSEC, NSEC or secret, then what you see is you just see what my NPub published because I was allowed to publish it because I own my secret key. The issue is that Alex Gleason and Vitor from Nostr, they're a couple of really high quality developers, have been able to figure out a way to turn your NPub into a public wallet of Bitcoin on chain. And then they figured out a way to zap that wallet on chain. It doesn't go through the Lightning Network. It is an actual on-chain Bitcoin transaction. So, whether you want me to or not, I can, if I so choose, send you Bitcoin directly to your NPub and you have no say about it whatsoever. And you might say, fine, send me Bitcoin. Well, there's some issues. And this is what Gigi is writing about in his piece called Careful, Icarus, Why On-Chain Zaps Are a Terrible Idea. Yesterday I relapsed. Not alcohol or drugs or gambling or anything of that sort. It was something worse. Having an online argument. Back when Twitter was still called Twitter, I found myself getting into many an argument. Not because I wanted to, but because, at least back in those days, the algorithm encouraged it. A constant back and forth between two stubborn people is off the charts on all engagement metrics, so naturally, it's what people want to see and do online, right? Well, anyway, I promised myself that I would never get into a Twitter argument ever again, and resorted to shit posting instead. Ah, bliss. But yesterday, I broke that promise, getting into an argument with Vitor on the topic of on-chain zaps. I consider Vitor a friend, and I appreciate that he is pushing the boundary, as he always does. However, I think that encouraging users to associate on-chain Bitcoin activity with their online identity is misguided at best and actively harmful at worst. Before I get into the why it's bad part of it all, I'll try to steelman Vitor's arguments as I understand them. In short, 1. Zaps are public anyway. 2. Lightning setup is complicated. 3. No setup is required for on-chain, and it's less friction for users. And finally, number 4. We have already built it, and it works, so why not give users the option? As I've mentioned, in the long back and forth thread with Vitor, I am not against the spirit of the idea. I think that every NPub should be able to send and receive money with as little friction as possible, and have always been an advocate for things like npub.cash and nut zaps. What I want to speak out against is the proposed implementation of the idea, which encourages bad practices and has the potential to actively harm users in the long run for the sake of short-term convenience, and we can do it, so why the fuck not, I guess. My initial reaction to seeing the proposal was careful, Icarus, followed by, oh, that's a terrible idea, right after. And it's my reaction still. Just because we can build something doesn't mean we should build something, as Jurassic Park was trying to teach us. Quote, yeah, but your scientists were so preoccupied with whether or not they could that they didn't stop to think if they should. End quote. Dr. Ian Malcolm, the character from Jurassic Park. But why? Why did the alarm bells of my intuition go off so hard? Why can't I shut up about it and let Vitor and Alex just have some fun to build this and play around with it? Because I'm pretty sure that people will end up using it and get terribly wrecked. That's why. Quote, I was immediately like, WTF, but I couldn't clearly articulate why it was so disturbing. End quote. Silvergate. Same for me. I was incredibly disturbed and couldn't readily articulate why this supposed feature made me so uneasy. So I am sitting down now in an attempt to write about it, which usually helps to structure my thoughts. And who knows, maybe some of the younglings will read it, or maybe some of the Nostr devs who don't know too much about Bitcoin can learn a thing or two about UTXOs and stuff. So let's get into it. Quote, zaps are public anyway. Yes, they are. Zaps are public. The balance of my Lightning wallet is not public, however. The history of the sats I received isn't public either, nor is the future of said sats. I tried to make this point by posing the following question, quote, all the zaps that I have received so far, what did I spend them on? Can you tell? Did I even move those sats at all? Where did the sats go after I received them? End quote. Further, I would claim that I've lost access to my wallet, and there wouldn't be a way to prove that this isn't true. This type of plausible deniability completely flies out the window in an on-chain world. Tying Bitcoin addresses to identities is what chainalysis companies do. And even though their assumptions are based on heuristical witchcraft and should be taken with a grain of salt, the unfortunate reality is that the legal system takes said witchcraft seriously. We should make the job of chainalysis harder, not 100x easier. Quote, but zaps are public anyway. Yes, they are, as I've admitted above. But you can choose to opt out. You can choose to zap privately, and your future financial activity is not forever tied to your identity. All that goes away with on-chain zaps. I'll just go ahead and quote Lola Leitz, since she hit the nail on the head. Quote, publicly tying your social media profile to one address forever is genuinely the biggest gift you could make to AML companies ever. To get that money out without hurting the privacy of people you interact with, you'd need to jump through so many hoops that it defies the entire purpose of this legendary UX upgrade in the first place. End quote. And again, that's Lola Leitz. She goes on to say correctly that right now, thanks to the Lightning Network, zaps don't dox you and everyone else you interact with for the rest of eternity. And as we've already established above, when I cash out my zaps, nobody knows where that money went to. Quote, privacy is the power to selectively reveal oneself to the world, to quote a cyberpunk's manifesto. Tying your identity to on-chain addresses not only nerfs that power, but takes it away from the individual permanently. In short, Using on-chain addresses for zaps is a terrible idea precisely because it reveals more than necessary. And to add insult to injury, it automatically makes this oversharing permanent. To understand why on-chain zaps are such a terrible idea, you have to understand how Bitcoin works. And I mean how it actually works, not just a superficial understanding like my private key is my bank account and related inaccuracies. There is no bank account in the first place, and there's no balance either. There's also no Bitcoin, and there's no identity associated with transactions. They are inputs and outputs, and some of the outputs are unspent. We call these unspent outputs, surprise, surprise, or unspent transaction outputs, or UTXOs. Conceptually, if Bitcoin would be a physical thing like gold is, you could think of them as lumps of material of various sizes. All we have is this unidirectional graph of transactions and some neat cryptography and proof of work to link them together, and that's it. The lack of identity in Bitcoin is a feature, not a bug. Bitcoin is a pseudonymous system by design, which means that it can be used privately if you are careful about keeping your on-chain identity separate from your other identities. Yes, plural. The consequence of all that is the following. If I send on-chain Bitcoin to you in a naive way, you can very easily spy on me by following the trail of transactions. It's like a loose string that you can pull on. And depending on your time, resources, and motivation, you might be able to unravel the whole fabric of my past transactions. In other words, unless the sender is an educated Bitcoin user who is well-versed in Bitcoin fundamentals and is adamant about UTXO hygiene and best privacy practices, the person who is sending funds via an on-chain zap will reveal way more than they intended via the deceptively simple act of zapping someone on-chain. And that's only half the story. We only talked about unraveling the past, and we only talked about the sender side. Knowing the on-chain addresses of someone allows anyone to spy on them in perpetuity. This is a well-known issue and was discussed on the Bitcoin Talk forums over a decade ago. Quote, "Your in-laws can see that you're buying birth control that deprives them of grandchildren. Your employer learns about the nonprofits you support with money from your paycheck, and thieves see your latest purchases and how wealthy you are, which helps them target and scam you. Poor privacy in Bitcoin can be a major practical disadvantage for both individuals and businesses." End quote. Greg Maxwell. Yes, zaps are public, and that's the point. But what preceded a zap and what follows is not public and shouldn't be. It isn't public right now because zaps use the Lightning Network, which has certain privacy characteristics that on-chain transactions do not and will probably never have. So when I said that, quote, Lightning is a sane default for zaps, that's what I meant. Lightning does not allow you to spy on the financial activity of the sender or the receiver in perpetuity. Using on-chain addresses for zaps not only allows this, but it makes it trivial. You just got zapped, great. It was an on-chain zap, not so great. What now? Well, the two basic options are do nothing and do something. And both are problematic. Here's why. If you do nothing, if you don't move the money, everyone will see how much money you have to your name, as was promptly demonstrated by Wrenchster and his Rich List and other vibe-coded projects. You might not even know about the money, but by using your INSEC to sign messages, read, you simply using Nostr, logging into something, or pressing a like button here and there, proves without a shadow of a doubt that you are still in control of your keys. For example, the keys that can move the money. Bad for users, fantastic for criminals, a wet dream for prying eyes. Gonna pause here for just a second. Wrenchster and his rich list. Rinster is a Noster NPub, so it's some guy out there or some gal, I don't know, it doesn't matter. But they created this thing called Rich List, like literally a day or maybe 2 days after Alex Gleason and Vitor basically installed this on-chain Zap infrastructure into their respective projects. All right, so what does Rich List do? It looks up your NPub, and it basically is reading your on-chain wallet of all the zaps and who gave them to you and how much money you have in your wallet. It took like 20, let's say, be conservative, 48 hours for somebody to vibe code away to scan the Nostr network of all the NPubs and find out who actually has on-chain Bitcoin tied to that digital identity. You see where Gigi's going with this? Let's continue. You could do something like you decide to move the money, which is to say, move the UTXOs that are now associated with your Nostr identity. Maybe you want to move them to your cold storage, or maybe you want to buy something online or spend it at a merchant directly, or maybe you want to send the money to a friend who isn't on Nostr yet. Whatever you decide to do, absolutely everyone in the world can follow the trail that these UTXOs leave behind. And some of the onlookers might have the means and the motivation to figure out what you did with your money and use it against you. None of the above is theoretical. For over a decade, people have been robbed, extorted, kidnapped, or worse, just because other people thought or knew they had Bitcoin. I encourage you to read through the list of known physical Bitcoin attacks. And since I'm aware that people don't read, much less click links, here are 3 highlights from the last 18 months. 1. A couple and their 20-year-old daughter were violently held captive by a group of criminals searching for Bitcoin. 2. 3 attackers invaded a home, tied up a family, and made several Bitcoin transfers. 3. A 38-year-old Chinese businessman was murdered and found buried in the ground with his hands and feet bound with packing tape. The list is very long. The above aren't the worst examples. I trust that you get the point. But zaps are already public. What are you worried about? I hear you shouting in protest. Yes, they are. Zaps are already public. But let me paint you a picture. Let's say I'm a criminal and I, quote, on-chain zap everyone on Nostr. Some of my targets will inevitably move their UTXOs to cold storage, potentially combining what I've sent and what I'm now tracking with their main Bitcoin stash. I have a script running that notifies me of this, only if it's above a certain amount, of course. A couple of days later, I get such an alert. Jackpot. Generational wealth, dude. I rub my hands as I browse Nostr for the latest post of my unsuspecting victim. Between memes and casual shitposts, I find a link to a concert, as well as an image they took on a stroll. There's a mountain range in the background. I paste the image into a geolocation engine. It matches the concert location almost perfectly. I scroll further down and find multiple selfies and a photo of their dog. I now know where they live, what they look like, what their dog looks like, and where they usually go to take their dog on a walk. Do you get it now? Do you finally understand why associating on-chain activity with Nostr identities is problematic? Do you understand why all of the above isn't an issue when using Lightning? Yes, zaps are supposed to be a public gesture. It's worth pointing out that private zaps do exist, however. But using on-chain for this public gesture is so much worse. Offering it as an option to users is incredibly dangerous because warning the users properly, like explaining the risk properly, is borderline impossible. You'd have to warn them about the past. You'd have to warn them about the present. You'd have to warn them about the future. You'd have to warn them that any potential attacker has undeniable cryptographic proof that they, the target, are in possession of sats. You'd have to warn them that they can't plausibly deny this fact because of the non-repudiation of digital signatures. As I've said it before, and I'll say it again, plausible deniability matters. The fact that multiple Nostr developers don't seem to get this point has me question my sanity. It also makes me question the supposed Bitcoin expertise of some of the people involved. I saw that some Nostr users are even starting to question the intentions behind this supposed feature in the first place, and I can't blame them. I won't go there yet, but if this nonsense doesn't stop soon, I might be willing to. Anyway, there's more. There's actually a third category, in addition to doing nothing or something, namely wanting to do something but not being able to. Depending on output size and the current fee environment, you might find yourself in a situation in which it's literally impossible to get rid of the money because the UTXO you received is below what's known as the dust limit. There are scenarios that make this problematic. Let's pick a ridiculous one just for fun. Imagine a mafia boss coming to your house, giving you money that was made via illicit means. He vanishes instantly after, but not before leaving a trail that leads directly to you. A trail that's very easy to pick up by the police as well as other mafia people. And to make things worse, you had no option to refuse the money because the mafia boss is also a witch, and a spell was cast that deposited the money directly into your soul. And even worse than that, he cast the Pulvis Assaultus spell right on top of it. Now the only way to rid your soul from the mafia witch dust is to throw more money at it. Yes, a disappearing mafia witch is a ridiculous example, but I'm trying to make a point. A more realistic example would be someone sending money to you as well as to one or multiple addresses on the OFAC list, suggesting to law enforcement that you're now part of a criminal network, or publicly announcing that any money you receive will be forwarded to every address on this list, possibly incriminating any sender as well as yourself. The thing that triggered me most when I first saw this proposal implemented is the fact that it's mandating address reuse by deriving a static address from an NPUB. Not only is this bad for the sender and the receiver, but also for other users that aren't even involved in this particular on-chain transaction. Remember the UTXO model that we discussed above? The fact that there's actually no coins in Bitcoin, but only inputs and outputs? One of the consequences of this model is that, given that the ledger is public, the only way to have any privacy is to hide in the crowd. Address reuse shrinks the crowd that you can reasonably hide in. This is bad. Really, really, really bad. Or to say it in a more fanciful way, quote, the relationship graph in a reused address is powerfully linked to that all of the inputs to that address are necessarily joined via the spending authority of your private key to all of its outputs, end quote. That sentence has been in the Bitcoin wiki for over a decade. It goes on to say, consequently, quote, address reuse harms the privacy of not only yourself, but also others, including many not related to the transaction. It also weakens the cryptography of the associated private key. Bad. So now let's get to the final point. We have already built it and it works, so why not give users the option? It used to be that curiosity killed the cat. But in the internet age, it might be more accurate to say that convenience killed the cat. And in today's day and age of vibe-coded slop, well, slopified everything, to be frank, it might be more accurate to say that velocity killed the cat. Don't get me wrong, I'm a fan of high agency activity and the, quote, you can just do things mentality. Always have been. But there's a fine line between just doing things and just doing damage to things. I hate to see unsuspecting users get wrecked. And if something insane like static address reuse on-chain zaps derived from npubs ever gets widespread adoption, we'd be in a bad place. As things are now, users are actively advertising how they can get zapped by putting a Lightning address in their profile. What address to use is a deliberate choice, and you can choose to not have a Lightning address set at all, effectively opting out of zaps. Users are free to put a Lightning address that is not under their control, and some users do to either support someone else or someone else's project or a charity, etc. This type of choice is removed entirely if clients make a deterministically derived address the default. I feel like a broken record when I keep saying that money and identity are not the same thing. Quote, the whole point of money is to not know your customer, end quote, to quote an Italian comedian. That said, I think it's fine to publicly state this is how you can send me money, which is, in part, what Lightning Zaps do. With the proposed on-chain Zap spec, this transaction or transforms into something like, this is my identity-bound payment info, and on top of that, here are all my bank statements, past, present, and future. Feel free to spy on all my financial activity forever. In some sense, this move is similar to relying purely on biometrics as identification, as opposed to passwords and other secrets. Convenient, yes. But biometrics are public, not private. They are usernames, not passwords. You can't change them. Imagine someone scans your face and has deep insight into all your finances. Well, that's a problem, since changing your face is difficult. I agree with Will that people who write software should abide by something like the Hippocratic Oath. Primum non nocere. First, do no harm. I tried to make this point with a ridiculous surprise button example. I won't reiterate it here. But no, I don't think we should ship an extremely reckless feature to thousands and thousands of people because we can. That's ridiculous. But silver linings. My hope is that something positive will come from all this. Tim is working on an implementation that uses silent payments, which would be a way to do this that isn't entirely insane, as I've mentioned over and over and over again. There's quite a bit of prior work when it comes to Nostr and silent payments, although the motivation and use case for said prior work was a different one. Will, also known as JB55, also known as the guy who brought zaps to Nostr in the first place, made a similar point. Quote, on-chain zaps don't need to be tied to an npub. You can do on-chain zaps via silent payments. This is the proper way to do it, not the retarded current spec. He also has a point about dust amounts. Quote, we can discourage people using dust amounts by automatically choosing Lightning zaps for the small amounts and on-chain zaps over a certain limit. That would get rid of unintended dusting, which is at least something. But it won't get rid of malicious dust attacks. At least there's some sanity to be found. The discussion is ongoing. Silent payments aren't a panacea either, mind you. They are meant to be non-interactive, as Callie pointed out. And on top of that, they will create on-chain transactions just the same, bringing fee pressure and bloating to the UTXO set just the same. One last thing. Zaps and numerology go hand in hand. 21 sats here, 69, 420 sats there, palindrome zaps, etc., etc. You can't do any of that if we hit the chain directly, because broadcasting the exact amount would make it trivial for an attacker to identify the actual transaction, which means any sane proposal would have to use blinded or otherwise obfuscated amounts, destroying a large part of what makes zaps interesting. Long story short, zaps should not touch the chain. And I should finally climb down from Mount Stupid to go touch grass. It was a nice excursion. Good night. So, that's the article from Gigi, and he brings in some really good points. Just a couple of comments here about those points. Gigi's right about all of this. But here's my main rebuttal to Gigi's rebuttal. If Alex Gleason didn't do this, if Vitor, also as a developer on Nostr, didn't do this, someone was going to do this. Why do I say that? Alex Gleason and Vitor are not malicious people. They're just not. Now, do I hang out with them and have beer with them? No, I don't. Have I talked to them personally, other than just over Nostr? No, I haven't. But I just know that they're not malicious people. They're not doing this because they want to screw everybody up. And Gigi knows this too. I know Gigi well enough to know that. But I would rather it be these guys that do it than somebody that was malicious that was going to do it, because no matter who did it, someone was going to do it. Why? Because it is possible. That goes back to that statement that basically says, just because we can do a thing, it does not necessarily follow that we should do that thing or that we must do that thing. Okay, that is an awesome statement to make. And I wholeheartedly agree with it. But if the problem is that first part of that statement, just because we can do a thing. Okay, Nostr enabled this. It's not even Nostr. It's this weird, how to say it, this coalescence of these two fabulous systems, Bitcoin and Nostr protocols. And they fit in this particular lock and key mechanism. And it's probably because the way that NSECs and NPubs are generated are done in the exact same way that private keys and public wallets are generated. And it is more about the philosophy. The idea that you spin up a private key, and from that private key you can spin up public wallets, or also known as public identities, because essentially it's sort of the same thing. But having one system like one world, the Bitcoin world, connected to a completely other world, the Nostr world, with this mechanism, that's what's at issue here. They are connected. And because of that connection point, it wouldn't matter if it was Alex Gleason that did it or Vitor Pamplona that did it. I can't pronounce his last name, I don't think. In either event, someone was going to do this because it is possible. And I'd much rather us know about this issue now, because what Gigi brings up is excellent. What if the CIA or the FBI or whatever decides to just dust the entire or actually not even dust, spend real money to give everybody like $5 on Nostr? Because at that point, what you've done is you've essentially injected a dye into somebody's bloodstream while they're in the MRI machine. What we call that is contrast. What Gigi's talking about is that this is going to allow contrast, to where instead of just one big mass of flesh that you see on the screen during an MRI, you can actually see individual tracts of veins and arteries and all the circulatory system, because we were able to inject contrast into it. Well, let's say that the guy that built contrast, and the contrast has been around since X-rays, right? Let's say that the guy that figured out how to do contrast was somehow or another, I don't know, killed before he was able to develop it. Somebody else would have developed it. We can't get around the injection of contrast. And we cannot sit there, or rather lay there in our beds worrying about shit like this. We have to be able to live our lives. So what is the solution to this problem? On-chain zaps are here and they're never going away. And even if Alex and Vitor pulled the entire system down around their ears, somebody else would just spin it right back up. And maybe that person would not be the person that we want to have spin it back up. So the only way that we can really move forward is you've got to make a decision. Like Alex zapped me on chain to my NPub a certain amount of money. It's I'm not going to call, like, it's under $10, so I'm not going to call it trivial, but it's definitely an amount of money that I'm not going to do anything with because of the things that Gigi is pointing out, which I already knew. But I'm not mad at Alex. This is just life. How many people have been wrongly accused of murder or arson or something like that simply because, I don't know, their ex-wife was really pissed off at him and set them up? It's called a setup, and it's happened over all the history of humankind. I got set up. Your Honor, I was framed. I mean, this shit has been happening for years. Just because it's now in the digital realm doesn't make it any less crappy or any more effective than it's already been. I don't think we should lose our minds. I don't think we should, tear out our hair and stop using Nostr altogether. If you're really freaked out about it, then spin up another NPub and never mention your old, or spin up another NSEC and then from that another NPub on Nostr. Never mention your name, go completely anonymous, and rebuild your entire social graph without ever mentioning your old NPub. You want to do that? Do we continuously have to allow ourselves to be redirected through mechanisms of fear? And my answer to that is no. It doesn't mean be fucking stupid about it either. It just means to be paralyzed by something you have no control of just puts you into control of somebody else or some other system. This is not the way for humans to live. Now, after all that, I want to move on to just speak a little bit about this. Gigi mentioned privacy-based on-chain zaps are possible. And he was mentioning a developer named Tim Borma. He's also on Nostr. And he had this small note. It says, "Okay, I did it. Instead of P2TR addresses for your NPub, I implemented silent payments. I managed to 1, create a silent payment address from my NPub, 2, send a silent payment from Cake Wallet, the only wallet I could find that supported it, 3, detect the valid transaction output that contained the silent payment, and 4, swept the funds from the silent payment to a fresh Bitcoin address I control using the corresponding NSEC. So the bottom line, I have shown that any NPub can receive silent payments and sweep those funds to another wallet. Total privacy on the public blockchain. No one knows I received or sent the funds. I have the command line working, and I will figure out how to wire this into the web app in the coming days. That should put an end to the debate of using your social NSEC as a wallet. The command line looks like," and then he goes through a little bit of code, and I'm not going to bring that to you here. This is what I love about humanity. So not only did Alex and Vitor, make this a thing that everybody's losing their mind about, 48 hours later, somebody made it even worse by saying, oh, here's the people that hold the most money in their NSECs, as given by their NPub, so you know exactly who they are. Top 10. He's literally got a top 10 list. Who holds the most money? Great target list, right? Yeah, the guy that owns the most right now is got like $10. That could change. Let's not blow smoke up our ass. That he could end up with a full Bitcoin. And it's like, oh shit, now it's not trivial. Now it's actually a real target. And then a few hours after that, Tim comes along and says, I figured out how to convert all this shit to silent payments. This is why I'm not worried. I'm just not worried. We're watching some of the greatest development of humanity of all time. And I'm not scared of it. It's not making me lose sleep. It excites me. And sure, it's like walking through a forest you've never walked through before. If you're someone like me that absolutely is in love with forests and you go to a new one and you've never been walking around that one before, it's kind of a little different terrain and you might get bumps and scratches because you're not used to the terrain. You might twist your ankle a little bit. You're not gonna die unless you're entirely too fucking stupid about it. So everybody take a breath and we'll run the numbers. CNBC, futures and commodities. Well, I guess shit's popping off in the Middle East again. I can tell because all the energy prices are up today. Brent North Sea is up 1.5 points to 106.53 a barrel. West Texas Intermediate is up almost 2 points to 113. Now, $100.13. Natural gas is up 1.5 points to 305 per thousand cubic feet. Gasoline is down a third, though, $3.47 a gallon, and Murban crude is up, 3.5 points to 106.93. Metals are mixed. Palladium is up 1.5, but gold is down almost a half to $4,517. Platinum is up almost a half, and silver is basically crawling sideways at $76.15. Copper is down a half point. Ag is mixed as well. The biggest loser today is cotton, 4 points to the downside. Biggest winner is coffee, 1.7 to the upside. Live cattle down 2.3%. Lean hogs down 2. Feeder cattle down 2.5 points. The S&P is down a quarter. Nasdaq is down a third. The Dow is down 0.14%, and the S&P Mini is down 0.6%. And then there's Bitcoin holding in at $77,160. That's a $1.55 trillion market cap. We can purchase 17.1 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,032,232.4 of. Average fees per block are normal. It's about 45 blocks carrying 100,000 unconfirmed transactions waiting to clear at 2 sats per VByte. Low priorities will get you in at half a sat. Hash rate dropping a little bit to 970 exahashes per second. Again, I'm unconcerned. From Jane's Street Addiction, yesterday's episode of Bitcoin, and if it'll ever freaking spin up, William the French with, 5,000 sats. Thank you, brother. He says, value for value is the future. Respect your commitment. Thank you. I appreciate that. Nick Dose with 217 says, cheers. Cheers right back at you. And Nostra Gang with 101 says, thank you. No, thank you. Please support the show. Donations are more than welcome, more than appreciated, more than a sight for sore eyes. And so is streaming Satoshis, and you can do both with any Podcasting 2.0 enabled app. Get rid of your old podcasting app. Get something new, something that's got features like chapters and chapter art and album art and the ability to zap and boost and donate and all the things, man. There's all kinds of neat stuff around Podcasting 2.0 enabled apps. My favorite is the Fountain app, and you can find that at fountain.fm. That's fountain.fm. Boost the show, donate to the show, stream sats to the show, because that's the way that I want this to work. That's the weather report. Welcome to part 2 of the news that you can use. Sinaloa cartel linked to massive crypto operation as feds seize millions. This is out of 99 Bitcoins. Federal agents just delivered a major blow to one of the world's most dangerous criminal organizations, with crypto at the center of it. The DEA and FBI have seized more than $10 million in crypto. 10 million is nothing. It's nothing. But the crypto was directly tied to the Sinaloa cartel fentanyl pipeline, exposing a sophisticated digital laundering network that spanned multiple U.S. states. According to reports, agents dismantled a digital pipeline that converted drug proceeds from fentanyl, methamphetamine, and cocaine into crypto assets, including Bitcoin and shitcoins, including Tether. Funds were routed through a web of wallets across 11 states before consolidating in Miami hot wallets. Oh, that's dumb. The operation was prompted by the U.S. Treasury's Office of Foreign Asset Control to sanction more than 12 individuals and entities tied to 2 Sinaloa cartel-linked networks. The bust included a laundering ring headed by Armando de Jesus Ojeveda Avilles, who was accused of handling fentanyl proceeds on behalf of Los Chapitos, the cartel faction led by El Chapo's sons. I don't know, man. $10 million for the Sinaloa cartel, I think that's probably less than 1% of their of how much money these guys actually have. Probably less than 1% of what they make annually. So I don't know, man. I honestly think that this is a little stupid. I'm just saying. However, there is a little bit more about this from Cointelegraph. United States sanctions Sinaloa cartel-linked Ethereum addresses. The U.S. Department of Treasury, Foreign Asset Control, or OFAC, sanctioned 6 Ethereum addresses tied to a Sinaloa cartel money laundering network that allegedly converted drug proceeds into cryptocurrency. So the majority of this actually looks like it was being run through Ethereum. 6 addresses. I don't know, man. I honestly think that between these two, this is really just a bunch of nothing. It almost sounds like if I was in the Sinaloa cartel and I lost $10 million because of the feds, I'd be going, that's like a bee sting. It's like cost of doing business trying to get honey out of the beehive. I don't think it's anything, but whatever. Let's move to Binance, where they are launching SpaceX pre-IPO perpetuals amid a $2 trillion valuation bet. CoinDesk's Omkar Godbold. Binance has launched perpetual futures that allow users to trade the anticipated valuations of private companies before they go public. The first contract to go live is tied to SpaceX, a company expected to debut at a valuation of $2 trillion or more. The pre-IPO perpetual contracts are designed to provide retail traders with early exposure to high-profile initial public offerings, a market segment historically reserved for institutional investors and venture capital firms. The first listing will be margined and settled in the dollar-peg stablecoin Tether, and is based on the expected market valuation of Elon Musk's Space Exploration Technologies Corporation. The move marks the expansion of Binance's derivatives product suite into traditional finance territory. Quote, pre-IPO perpetual futures is yet another example of how Binance is democratizing access to market opportunities by combining crypto-native infrastructure with major financial events. And as interest in public listings continues to grow, we're giving users a more flexible way to engage with anticipated IPOs just earlier. Sun Yet Zhan, head of spot and derivatives business at Binance, said in a press release shared with CoinDesk. Quote, this launch reflects our vision for Binance as a financial super app, one that offers access to an expanding range of financial opportunities that have traditionally been more difficult to reach. Okay, that's pretty much all we need to know about this one. But remember, both Anthropic and OpenAI have both come out and said, dude, unless our board of directors have expressly given their blessing to any of these products tied, well, not tied to, but like their tokenized equity. Unless they have specifically blessed that product, it is worthless. So start being really careful, because what we were just describing, these futures, those aren't under the subject of the board of directors of companies. These are going to be kind of legit, but the water is muddy. So be very careful about all this stuff. I mean, future derivatives, futures, perpetual contracts tied to IPOs that haven't even happened yet. It's just, please understand that this is new territory. And Binance may be right in suggesting that all they're doing is democratizing access. I mean, I remember I wanted to pick up some Google when it IPO'd, and my broker's like, you're not touching this shit. And it wasn't because it was advice. He was like, you don't have enough money to touch this IPO. Okay, from that standpoint, I kind of dig what Binance is doing, but it doesn't mean that it's safe. So please be careful. South Carolina passes law banning CBDCs while protecting crypto users and Bitcoin miners. Logan Hitchcock from Decrypt. Individuals, businesses, and Bitcoin miners in South Carolina have earned protections for the use, custody, and mining of digital assets thanks to a new bill signed by the state's governor, Henry McMaster. So honestly, that's all we need to know about this, because I have literally talked about this bill 3 times on this show. It's Bill 163. It was introduced in January 2025. It effectively bans the state's use of any central bank digital currency. It protects individuals to be able to hold and use Bitcoin, and it protects the mining of said digital assets. But now it's state law in South Carolina because the bill has gotten out of all the committees. It's passed the state Senate. It's passed the state House of Representatives. So the whole bicameral process was done. It was codified and ratified and all the pretty stuff and wrapped in a little bow and delivered to the governor's desk, and the governor signed it into South Carolina state law. So now South Carolina and all of the entities within are unallowed. It is illegal. You cannot use a CBDC. It is persona non grata. Thank you, Henry McMaster, for having some kind of semblance of sense. Okay. So Silvergate. Silvergate's Frahar, I can't pronounce her name, breaks silence on settlement with Gensler's SEC. Okay, fine. Braden Lindria from Cointelegraph will start us off. The former chief risk officer of Silvergate Bank revealed she made the decision to settle with the U.S. securities regulator in 2024 to avoid a multi-year battle in court where she was accused of misleading investors about anti-money laundering rules and how the bank monitored crypto customers. In her first public comments about her settlement with the SEC on Wednesday, Kate Fraher claimed that no financial agency proved that Silvergate's anti-money laundering controls had failed, and that she only opted to settle so that they could move forward. She agreed to a civil penalty of $250,000 and was banned from serving as a company executive or board director for 5 years. Quote, the process itself is designed to apply maximum pressure and the human costs are real. I was personally debanked and had credit lines summarily closed, an aggressive tactic used to disrupt the daily life of people and force compliance, she said. The comments provide more insight into the circumstances surrounding the wind down of Silvergate, a crypto-friendly bank that voluntarily closed following the collapse of FTX. She said her ability to comment came after the SEC rescinded a long-standing gag order on Monday. She said that the wind down was not because of a bank run, or market volatility from FTX's collapse in November of 2022, even as the bank experienced a deposit run of around 70%. Instead, she said the company chose to wind down because the broader administrative and regulatory pressure levied against the digital asset industry made operating a viable business impossible. Many crypto industry pundits labeled this as Operation Choke Point 2.0, an unconfirmed plan in which U.S. financial regulators cut off banking systems and services to crypto companies in an attempt to restrict their ability to operate within the broader financial system. Indeed. So if you don't remember Silvergate, it was right around the time of Silvergate and was it Three Arrows Capital and FTX and Alameda Research and all of that shit, right? And it was really after the FTX collapse, and then we got onto, then there was a little bit of some macroeconomic pressures that were global that put the squeeze on banks, and Silvergate was one of them. And Silvergate was able to make all of their customers whole. When the bank run, the aforementioned bank run that they were talking about, when that came, they were able to completely deliver on all of their customers. And they had a little bit of money left over, and none of us could understand why they were forced to shut down. And now it turns out that they weren't forced to shut down. They were like, we don't want this fight. You're making it too hard. You're too big. We're too small. We cannot fight the federal government because they don't like us. They're really mean. They're really strong, and they have no fucking ethical base. Whereas they'll bail out other banks that are clearly unethical, but no. Silvergate, who was able to completely service their customers, was completely solvent. Nobody ever proved anything, that they were mishandling money or they were not following know your customer compliance or anti-money laundering compliance. Nobody's ever been able to prove that. And yet it was so bad that they were like, fuck it. Maybe the Trump administration will actually do something better. I don't know. Nobody knows nothing unless you're the wife of Sandbox co-founder Sebastian Bourget. She was targeted in a kidnapping attempt at home in France. This is out of the block and will end us up for the day. The wife of Sebastian Bourget, co-founder and COO of the Sandbox, a blockchain-based virtual world built on Ethereum, was reportedly targeted in a kidnapping attempt at the couple's home in Villeneuve, Seine-et-Marne, France this week. I know I butchered that name. 2 suspects have been arrested and 4 others remain at large, according to the French newspapers. The report said a single individual arrived at the property disguised as a delivery man, wearing a branded vest and carrying a cardboard box. When the wife opened the gate, 5 hooded accomplices rushed into the courtyard, dragged her by force, and attempted to push her into a vehicle, according to the newspapers. Neighbors, alerted by the victim's cries, intervened and forced the group to scatter. 4 suspects reportedly escaped in the vehicle, and 2 others fled on foot, hid nearby, and then summoned a ride-hail car. That second vehicle was intercepted shortly after by police officers. The 2 arrested identified as Mateo V, born 2010, and Waleed H, born 2009, both residents of Pantin in Sienne Saint-Denis. So the kidnapping attempts remain in France unabated, apparently. And it's the exact same way that they've been doing all these. They're posing as cops or they're posing as delivery men. Dude, just let the delivery get left at your gate or left at your front door. Don't, at this point, even if you have Bitcoin and you feel fairly certain that you've not told a soul that you have Bitcoin, dude, just let the delivery guy put the box on your porch or at your front gate. Let him leave. Wait an hour. Then go get it. There is no reason to meet the delivery guy at the door. I don't care if that motherfucker is holding a certified mail letter that you got to sign for it. At that point, that's a problem though. You get this United States Postal Service. Yes. You got a certified mail here. You got to sign for it. Then you open the door. Boom. Because that's the only way that you can receive certified mail. You have to sign for it. That's part of certified mail. This is a problem. Because if you don't sign for it, it goes back to who sent it to you. And you don't know who sent it to you because you didn't open the door to look at it. I don't know, man. Just be insanely careful. Don't wear swag. Don't tell people you got Bitcoin. Stop wearing swag to conferences. Maybe stop going to conferences altogether unless they're the really small ones in Prague or something like that. I don't know. But this just doesn't seem to be stopping anytime soon, especially in France. So be careful out there so that I can see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.